Welcome to India Market Open. It's Tuesday, and I guess we're coming back after a long, happy, holy weekend, going into a Good Friday week. So it's holiday truncated, so that's a good thing. But I think trade globally, Niraj, is looking defensive. For more reasons than one.
More reasons. Unfortunately, the geopolitics comes back into the flavor. Crude is higher, and lots of news flow around us as well. 3 days on a trot, we were on and off. Lots of stock-specific news flow as well.
It's going to be an exciting Monday morning. But like Niraj said, it is geopolitical stress, and that's never a good thing. So while the markets largely have been holding steady, stress on the Russia-Ukraine border is what could potentially impact the global sentiment. A quick check on the implied Nifty before we move on to taking you through everything that's happening across the world this Tuesday morning. GIFT Nifty, implied Nifty is indicating to a 30-point downtake in early hours of trade. Remember, Friday was a day of recovery, but it looks like we're going into a week which is also the monthly F&O expiry. So it's going to be volatile and it's going to be range-bound. But let's take you through what's happening across the world. Asian markets trade on the defensive in early trades. So from Japan to China to Korea to Hong Kong, most of those markets are trading defensive. They're volatile in a tight range. Inflation data from Japan is expected anytime now. In terms of what's driving Asian markets, remember a stronger dollar last week led to currencies, Asian currencies like the yen and the yuan actually declined very sharply. Higher US bond yields is what's denting sentiment across Asian equity markets. Remember, the Japanese yen is trading flat as we see it right now, largely after the currency diplomat indicated that the fall in the Japanese yen, which was seen last week on back of a stronger dollar, does not reflect the fundamentals of the country by any chance. The Chinese yuan, remember, will remain volatile. There's a lot of back and forth there. The Chinese central bank has been intervening to provide some support to the local currency in China as well. Apart from that, that's of course the financial news flow that's impacting equity markets. But the overarching theme over the last few days and going into this week is geopolitical tension between Ukraine and Russia, and that's not looking good for most asset classes. Wall Street as well took a little bit of a break on Monday's trade. Friday was a solid day of trade. It's gearing up for the fifth straight month of gains coming in for the Dow, the Nasdaq, and the S&P 500. But Monday really was a day of taking profits off the table after the Fed-fueled rally played out all through last week. The Dow, the Nasdaq, S&P 500 are up anywhere in the range of 2 to 3% for the month, and that's expected to remain largely status quo. Remember, Friday is also a holiday in Wall Street. Apart from that, it was a pretty solid day of trade for the Bitcoin. It was up 7.5%, so that was good news coming in. The bull's pretty much taking control of Bitcoin after a 10-day cool-off period on back of the halving season. Apart from that, crude looks pretty well placed. Geopolitical stress, Russia, Ukraine, OPEC plus members not expected to add any supply is what's giving support to crude. Some of the big brokerages are indicating that $95 a barrel crude is very, very likely if this current situation actually goes out to persist. Apart from that, the dollar had everyone's attention. Asian currencies have been on a downtake, but it's not Asian currency weakness, Niraj. It's the dollar strength, and I think that's the concern. Gold as well is actually holding up quite well on back of geopolitical stress. So asset classes are gaining, unfortunately not for the right reasons.
Yeah, but thankfully the dollar just came off a little bit in yesterday's trade, which is good. But, you know, we were looking at things to monitor. Look at what Goldman Sachs has to say for the S&P 500 index. The Goldman Sachs view is that in a scenario of continued mega cap exceptionalism, the S&P 500 index could end the year at 6,000. So, you know, the jury is out there, frankly. Who knows what happens? Let's wait and watch there. But frankly, just taking off from what Samina was saying and then try and focusing on what the trade setup today could be like, I think that's the key thing. One, the geopolitics and the fresh geopolitical triggers could have an impact on sentiment and crude prices. We were showing NYMEX, but Brent is at 87 or northwards of 87. And therein lies the problem, that we are now back to those $87, $88 per barrel. And if what Samina said, the big brokerages are saying about crude, what she meant was Brent, from 87, 88, moving up all the way to 95, could actually cause a flutter or two. So could that bring about a bit of a risk off? I think that is the key question to be asked. And then, independent of what is happening to individual strikes, we've spoken about them so much, maybe it just helps to be defensive in nature. And in some sense, while if you look at the 2-week trade, it doesn't quite show that. And last week, frankly, small caps, real estate, all of them came back with a bang. But it's very difficult to move away from the sectoral bearishness that some of the sectors are producing. Here's the interesting data. This IT, despite the currency weakness, this extended bearishness in IT seems to be a done deal. But, Samina, it's a very interesting thing that happened over the last 2 weeks. There's a table that we have which shows that in the preceding week, Nifty IT was up about 1.07%, and real estate had corrected quite a bit. So that a cumulative band was about, or a differential in performance was about 9 to 10% in favor of IT. Last week, it just completely turned around. Real estate up 5%, IT down 5%. So very difficult for IT bulls to find any kind of favor. And therein lies the problem for one of the most heavyweight sectors in the country, 10-11% weightage still, despite the weakness. So that's the other thing to watch out for. And talk to anybody across the street. The one thing that they are betting on to either bet on upsides or limit downsides is autos and auto ancillaries. Almost every single person on the street is very constructive on autos. So that's the interesting piece that I gathered from dealing rooms, at least.
My only concern, Niraj, with auto ancillary is going to be crude, which is the jack in the pack. Because if crude prices do spike, margins will be impacted. And that will eventually start, tire companies, right? So anything to do with auto will start seeing a little bit of an impact at some stage. But like Niraj said, it's range bound. We need a directional move one way or the other, either down or up. And I think that's what's making it very difficult for traders to call the shots. But even the wicks. So while the bulls may not be in complete control, the wicks actually eased off quite sharply on Friday. And I'm not sure how you read into that too.
No, continues down. Every single day. We are less than 13, and therefore, if you just look at all that's happened to volatility in the last 1 month, it's just completely ebbed off. Now, it's an expiry week. Do we see a bit of a recovery from there is the key question. But does that really make an impact? Again, that's the other thing. And most people saying not really.
We've gone into a little bit of a zone, and that's the sentiment across the world. But like we've maintained this for the last couple of months now, the jack in the pack for the Indian equity markets is going to be crude. So it's one thing you want to watch out for very, very closely. What we saw happen on Friday as well was while the equity markets recovered, the rupee was also on a losing streak. Now, of course, no one's getting concerned about it because this is not a rupee phenomena. It's really a dollar phenomena that's playing out for world equity markets. But we'll take you through a few stocks. There are lots of stocks to talk about, but like Niraj said, the overarching theme continues to be defensive. Auto could come to some relief. IT trade is still undecided. We talked to Gautam Shah last week, and he was still constructive on the IT pack, third straight quarter running. So there is opportunity, but just, I guess, finding the right opportunity is the big task at hand. In terms of stocks that we have this morning, I have a bunch of stocks, the usual suspects, and I'm going to start with Rail Vikas Nigam. This one seems to show up on my list pretty much every week. If not twice a week. They've signed an MOU with the Airport Authorities of India for about 230 crores. What they're going to be doing is building a subway or an underpass between the operational facility at the Calcutta airport and the residentials for the airport staff in Kolkata. Will be a stock mover in terms of news because the size of the order is fairly big, so watch out for this one. But like we said, this counter might be getting immune to order wins because they've been coming in so thick and fast over the last couple of weeks at least. The other one that's also investors and traders might be getting used to is HAL. It's another order win for HAL from Yona Defense Force. They're going to be supplying two commuter aircrafts to the tune of 195 crores. So we don't know timelines, we don't know execution just yet, but for now it's a pretty large order win for Hindustan Aeronautics as well. Well, the other one you want to talk about this morning is ICICI Securities. Of course, SEBI has issued a warning post-inspecting its books and records for activities conducted in the merchant banking space in December 2023. ICICI Securities has reiterated that this will have no impact on its financial or operational activity due to the administrative warning letter. This is sentimentally a negative, so we will see the stock react. And remember, comes in the light of everything that we've seen, the likes of JM Financial in the last couple of months. Niraj, you want to come on this one? It's not material in terms of the letter, but I think sentimentally it comes back to what the regulator, it's difficult to understand what the regulators are really trying to do with some of these non-banking institutions, because that's really where the alpha has been.
Yeah, but as in, frankly, if I look at the regulatory moves today, Samina, independent of what's happening to ICICI Sec, frankly, I think the IRDA notification on the final regulation for insurance products seems to be the really big thing. So, we'll continue on some of the other stocks, but the likes of HDFC Life and some of the others, Max Life, are certainly the important stocks to focus on, and we should highlight them now. So what's happened, viewers, is that IRDA has notified the final regulation on the insurance products. It's a status quo on the surrender value of non-linked, which is both par and non-par products. And it just removes the uncertainty, or one piece of uncertainty on the life insurance sector. And as my note suggests, HDFC Life and Max Life are the ones which have the higher exposure amongst the listed private life insurers, and very likely that those might react more positively. So that's watch out for that set of stocks. From a regulatory perspective, there is also this talk of some special audit happening on some of the NBFCs, IFL Finance, JM Financial. Maybe those react to, who knows. So from a regulatory perspective, 2 or 3 things. And before I move to my set of stocks, the other very interesting development that happened was Naveen Jindal joining BJP. And I wonder if that brings JSPL as a stock firmly into focus today.
Yeah, that's an interesting way to look at it, right? Yeah. So JSPL could be one. I'm just going to add one quick stock before Niraj takes over his list of counters. Uno Minda, watch out for this one. They've entered into a technical license agreement with Star Charge Energy. This agreement will allow them to manufacture and sell EV charging units in India. This, remember, builds up on the EV-specific product offering that Uno Minda has. They already have a significant presence in the two-wheeler space, the passenger vehicles market being a much, much larger target audience for Uno Minda to focus on. Jefferies has come out and reiterated a buy call at that 820 rupee target price. Now, what is interesting is what they're saying is that Uno Minda historically is known to pick up new businesses and actually do really well at turning those things around and making them work in their favor. So that's the other one. But a bunch of other brokerages, Niraj. It seems like it could be a morning for Interglobe Aviation, interestingly.
Yes, too. But just before I get to Interglobe Aviation, Samina, just rounding off that piece, and there is an NDTV Profit story as well, by the way, on this, that RBI is going to conduct a special audit for regulatory breaches by IFL Finance and JM Financial. I wonder if this kind of SARS the mood for these two stocks as well. So that is the other set of stocks to keep in mind. And Samina is right. A lot of brokerage calls, but before that, let's talk about the deals. So Mankind Pharma will be in focus today. Beige Limited is going to sell up to 2.9% stake through a block deal in Mankind Pharma. This offer is in the range of 2103 to 2214 rupees per share, which is at a discount of 0 to 5% to the current market price. Now, it's not a very heavy discount, but it's a large deal. At that, it's about 2,450 crores or slightly around that region, and therefore, who knows, Mankind Pharma could start off lower and stay lower, but if it gets subscribed well, it could do better too. So keep an eye out on the way the subscription happens. It could be a tricky one to trade, but keep that in mind. The discount is to the tune of 0 to 5%. The other one, before we get to brokerages, is the lock-in period ending for some stocks. Now, Zaggle Prepaid and Azad Engineering are the ones. To the tune of 49% and 17% is the quantum of equity that is getting opened up for trading today. And therefore, when a large set of equities available for trade in a market moved the way it is today, you might well see a bit of a reaction. So don't be surprised if there is a bit of a reaction on Zaggle in particular, but maybe even Azad Engineering. Watch out for both of these. They're not cheap stocks, by the way, and therefore could be interesting ones to monitor. But Samina spoke about brokerage views, and Interglobe Aviation comes firmly in focus. There are a lot of companies that have done this analyst meet. There's Crompton Greaves Consumer, there is Tata Motors coming up on the 27th tomorrow, but I think Indigo is the key one. So what our brokerage is saying, MK on the note on Indigo, they say that it's the second analyst day, underline the ambition of the company to double by calendar year 30. They say the management believes that the recent slowdown in passenger traffic is more supply-led as the demand is strong. The new guidance for FY25 with the ASK to PAX growth at 11 to 12% is half of FY24, but the earning outlook seems steady with stronger yields. Jefferies has raised Indigo to a hold with a target price of 3435. So that's the second brokerage. And Indigo, which has an overweight rating and a target price of 4145, their commentary, look at that commentary from Indigo. They're saying that the FY25 growth guidance is ahead of their estimates. The yields in Q4 are running ahead of the earlier guidance of a flat YOY performance. And the company is targeting early double-digit capacity growth in FY25 versus Morgan Stanley estimates of 6% growth. Samina, the thing that stood out for me in all of these notes is the pre-planning that Indigo has done. Apparently, in each week for FY25, so starting April, every single week, Indigo will get one new plane. That's the capacity addition that Indigo is planning. Hopefully that eases your and my problem about travel.
Only if it gets cheaper. But having said that, Niraj, this was a few weeks ago, and you and me talked about this, of how a number of the small and mid-cap traders are actually betting big on Indigo. Now, of course, the fundamental news flow is also flowing in and somehow making it work out for these traders. But a number of investors and, your medium-term traders have actually been very constructive on Indigo for reasons more than one, and we were actually seeing that flowing in. Also, quick one on Indus Towers. I don't know if you picked up reports from the weekend. The stock, remember, was one of the big gainers in terms of Friday's trade. There are reports that Vodafone may be looking to offload some stake in Indus Tower to the tune of about 2,000 crores. Now, I know you track this one quite closely, Niraj, but important news, I'd imagine, if this does play out. It was closed at, 270 rupees, 271 rupees a piece. And this would equate Vodafone's equity to close to about 1,500 odd crores in Indus Towers. So I think these are reports. Once again, we have no way to clarify this for now, but that could be one trigger that led to Friday's rally as well.
Yeah. And also the other thing that happened, Samina, was American Tower Company's decision to convert the debentures into equity. Now, Citi's come out with a note today with that perspective. So that's the other piece of news. They have come out with a note saying they have a buy rating with a target price of 320 on Indus Towers, and the target price could potentially rise to 380 or 400 as well if the multiples change. And the reason, ATC's debenture conversion to equity would mean lesser cash outgo for Vodafone Idea in FY25 because they don't have to make those payments on debentures, which is, according to them, a positive. And because of all of this, and if Indus Tower manages to recover some of its dues from Vodafone on time, they expect Indus to generate close to 4,000 crores, which is about 15 rupees per share, free cash flow in FY25. Now, that is big for Indus Tower as well. And no wonder that the stock has done so well.
70%, I think, is what it's up.
But despite being in the F&O ban for such a long time, it's done really well. And it'll be interesting to see if there's a bit of a follow-up action to Indus Tower in the session today after the manic move that it had.
On 13% on Friday, the news that Niraj mentioned, the fact that Vodafone might be looking to offload some of their stake in the company through a block deal next week. Remember, there were also reports, in fact, we know this, on the 1st of Feb, a KKR entity, Silverview and Canada Pension Plan had offloaded their holding in Indus Tower, marking a complete exit. But like he said, it's been in an F&O ban. The stock was up about 9% in the last week as well. So 13%, pardon me, on Friday itself. So it's been interesting. Indus being one of them, all cargo logistics. We'll find out if there's going to be, from our technical analysts, if follow-on buying could be expected in some of these names that we saw were big movers on Friday itself.
Yeah, and just lastly, moving away from brokerages, and keep in mind, I think day after tomorrow is where we get a slew of brokerages on Tata Motors post their analyst day. It's probably the most sought after stock. I won't be surprised if the number of analysts attending that meet would be a record high for almost any company because it's such a stock in flavor. But a couple of stocks, Samina. Sanghi Industries, and a lot of chatter around promoter Ambuja Cement selling 2% stake in the company for 258, because so many queries came to us as well on Twitter that, why is it that the company which bought it at a higher stake is selling 2% at a lower price? Because the promoter stake optically stands at 60.44%, but I think the Ambuja family, Ambuja group, as in the Ambuja Cement, excuse me, plus the Sanghi family together, if you think of both of them as the combined entity of the promoter entity, then that stake was above 75% is what I learned. And therefore, this 2% equity sale, in order to comply with the norms of shareholding, I think that is where this 2% equity sale has happened. And maybe that's why the stock may not necessarily react too badly to this development. So that's part one. And work hard. It was an NDTV Profit exclusive about a month ago for the QIP. Very likely that today the QIP pricing for Workhard could be out, could be an interesting one. We're probably going to talk to Mr. Habil Khurrakavila tomorrow, so it'll be interesting, Samina. I look forward to that conversation.
Yeah, it'll be exciting to see what he has to say.
Yeah, and so that's the other thing to monitor. But that's the very long trade setup today. Now, to the more important thing, one of the other very important things that happened in Friday's session and begs a conversation is what happened to rupee, Alex.
Who moved the rupee, right? That's the big question. And what does it mean for all of you sitting at home and indeed for the exchequer? What does it mean for the companies that are using the rupee? And in fact, a lot of the exporters that will benefit from it. Of course, this is a conversation that is happening because the Indian rupee hit a low point of 83.42 on Friday during trade. And that, by the way, is an all-time low. And then in offshore trade post that, Samina, it went further lower. The big question is, why did it move down?
I think the only good thing, Alex, in all of this is this is not the fault of the rupee. It's only about the dollar. And if you look at how the Asian currencies have been behaving after the Fed maintained status quo on its rate cycle, you saw the rupee, the yen and the yuan actually decline very sharply, right? And that's really what happened in Friday. So while the quantum of decline was not very large, I mean, we went down, sure, we did decline. We closed off the day's low point. But I think the street was a little nerved because it was a brand new low on the local currency. Sure. Now, of course, the timing of it is not great because a lot of kids and parents are going to be going on spring holidays. So, of course, they're buying dollars that are expensive, and that could be why this is making headlines. But on a more serious note, let's take you through what happened. The dollar rupee declined sharply in opening trade. There was some weakness. There was a little bit of RBI intervention. But towards the close, where we saw the rupee actually end lower, what you saw is the RBI was conspicuous by its absence. Now, that was something that caught a lot of people's attention. Also, historically, what we've seen is that every time in the month of March, which is year-end, dollar demand actually goes up quite sharply. Now, who are the guys that are buying dollars in the market? They're largely importers. You have crude guys, you have other importing companies. I mean, 80% of India's crude demand is actually imported, right? So all these OMCs usually spur up their demand for dollar to pay for the crude as in the month of March. So that's the annual phenomena that usually takes place. Along with that, what you also did see is that hedging costs have also shot up significantly. So while you're...
What is that indicative of?
So it really means that what exporters are trying to do at this... So, okay, if you have a stronger rupee, what do you think an exporter is trying to do? He's trying to ensure that for the foreseeable future, he can lock in this rate.
And most exporters do that.
And most exporters are mandated as well to do that, right? You want to play it safe because the last thing you want is currency fluctuation impacting your value in terms of top line. In this case, importers would have liked to hedge because you really don't know which direction the rupee is moving in. But the inability to do so was on back of a massive premium. So you did not see too much of hedging activity happening. The other thing which we talked about, and you called it technical, and I think this is what's technical, is you saw a number of stop losses getting triggered.
Okay.
So you had important levels on the dollar rupee pair which got locked, which got kicked in because of the way the dollar had behaved in overnight trade and in Asia in the morning. the impact of that was stop losses got hit, and then you had to go out and supply those dollars in the market, which were in short supply technically on back of importers buying so much more.
And it's interesting because just, I think if I'm not mistaken, over the weekend or on Friday, you had data on the forex reserves that came
Record
out
highs.
For the month of, or for the fortnight ending 15th.
And I think one more factor which I want to quickly mention is it's also book closing for investors worldwide, right? So March usually sees FPIs also start checking out. So they're going to be closing the books, which also means that if you're selling the Indian equity, you're buying dollars and you're taking it out. Friday saw 3,300 crores of equity being sold. So you had FPIs, you had OMCs who were coming in and buying, you had stop losses being triggered, you had an arbitrage trade opportunity because the onshore and offshore there's a 50 paise gap. So you were buying in the onshore market and selling in the offshore. That led to the other impact. So lots of excitement for currency traders.
But then the one missing element was the RBI towards the end.
Yeah, and that is very interesting.
Perhaps the RBI also thinks that all of these factors will dissipate.
And they should, right? I mean, I think there are a couple of things. So what's going to be important is to see how the dollar rupee behaves this week. The good news is the dollar index globally is trading flat. So there's no major sort of strength coming in.
It's 104 or thereabouts.
The yuan and the yen are also holding steady, which is again good news. So if you're opening to those cues, the gap down on the dollar rupee pair, so a stronger rupee can be expected. It will be volatile. It'll be interesting to see what the RBI does. But some of these factors will play out this week too. But from a more medium-term perspective, most traders believe that with the passive inflows coming into India,
so the on back funds.
On back of JP Morgan and of course Bloomberg, the rupee will strengthen. And we've seen flows coming into the bond markets consistently for the last 7 months. So that's a positive. You indicated that reserves are a record high.
Yes.
Good news again, because this is some ammo for the RBI. If they start getting nervous about the currency move, they can go out there and supply the market with as much dollars as they want. Now, again, the only jack in the pack again here is crude, Alex. I think, I've been harping about this for so long, but I really think this could change the complete dynamics. Be that deficit, be it the currency, be it equities, be it earnings for India Inc.
No doubt. And we're already at $87. You pointed that out earlier today. And $95 is not too far away. In fact, triple digit is also not too far away. And of course, as one of the largest importers of crude, that hits the exchequer immediately. Of course, on the flip side, and you've pointed this out also, and we pointed it out in the past, a weaker rupee is essentially best for the IT companies, which are
IT and
pharma, which are a little bit down in the dumps right now.
Holiday goers, importers are not going to be happy. So people like you and me are not very happy about
You're pushing your holiday, Samina?
I am, for sure. Waiting for the rupee to get to 70, which is never happening.
All right, on that note, we have to slip into a very, very quick break, but we've got a lot of action on the other side, including some exclusive news, so do stay tuned.
Back with India Market Open right here on NDTV Profit. Let's take a look at the top headlines at this hour. US markets take a breather, benchmarks and lower as big tech companies weighed on Wall Street. Futures trade in green on dovish Fed commentary. Back home, short-term traders are on the defensive as sentiment continues to be negative despite indices, both small caps and real estate doing very well last week. Tata Group has been going through a significant transformation, says N. Chandra of Tata Group, adds that the group has pivoted to sectors such as green mobility, renewable energy and semiconductor fabrication. Adani Ports to buy 95% stake in Gopalpur Ports for 1,350 crore rupees. And Zomato's Dipinder Goyal says Flipkart's entry validates potential of quick commerce as a business segment, an exclusive interview. Get the implied open up on the screen for a moment and just to mark what the indices could do this morning. Remember, global markets are a bit tepid, save for Kospi, of course, which is on a roll, and which is why maybe, just maybe, we have this slight bit of a downtick that we're seeing in the session today. But on to an NDTV Profit exclusive. Sources tell us that Tata Sons is looking to monetize assets for the first time. My colleague Sajid, who's on top of the news, joins us now. Sajid, what are you gathering from your sources? This is big news.
That's right. The Tata Sons, which is the holding company for the entire Tata Group, is now pivoting itself into monetization of assets within the group. Remember that Tata Sons hasn't been looking at monetization for a long time, and now there is a policy change which is coming up in Tata Sons, which looks at raising funds using monetization of current assets, which could be listed or unlisted. In case if they're unlisted, it's going to be through listing and getting strategic investors. But this is a monetization which is very significant for the group, because in the recent times, in the last 2 to 3 years, Tata Sons have moved from traditional businesses to new age businesses, which include semiconductor fabrications, lithium-ion batteries, or green energy, and all these are huge investment businesses. And Tata is looking to raise funds. Tata Sons is looking to raise funds to support these businesses in the incubation period there. If you look at some of the kind of monetization that has happened so far, the recent TCS sale of 0.65% stake, where Tata Sons raised nearly 9,300 odd crores, was part of this change in strategy and where they are looking at monetization. So it doesn't mean that Tata TCS will be further monetized, but there are many more assets within the group which can be monetized going forward, which includes listing of some of the companies like a Tata Play, which has already filed a confidential filing with SEBI. There are financial services businesses which includes Tata Capital. There is insurance company like Tata AI and Tata AIG. In the infra space, you have Tata Realty, Tata Housing and Tata Projects. These are all big businesses with good revenue potential and profitability. Apart from that, Tata have already invested more than 18,000 odd crores in the digital businesses, which includes Tata Click, Tata 1MG, Big Basket, Chroma. So these are some of the big businesses which it holds in its as investment in its books. And it will look to monetize many of them in the next couple of years as it looks to incubate many of the new businesses.
Sajid, I have a question. One, because we call in this a pivot. Actually, it's a two-part question. One, maybe you covered it, but I have a specific thing here. That do you think that this, in some fashion, has any implication for this long-debated Tata Sons listing? Part one. Part two. As and when we get details, I'm guessing this will become clearer, but do any of these asset monetization calls have implications for any of these stocks on the listed end over the course of the year? Because if they come out and sell big, if they do, then that might have implications on near-term caps for any of these, right?
See, in most of the cases, these are wholly owned subsidiaries of Tata Sons, except for Tata Projects, which has in which Tata Sons has nearly 44.5%. The rest being held by Tata Chemicals or Tata Power and other Tata Group companies. So, if Tata Projects goes ahead and undertakes a listing, then these some of the listed companies will be impacted in a positive way, because they will be able to monetize some of the stake which has been held. Remember, Tata Power and Tata Chemicals and Tata Steel are some of the companies who are also taking aggressive capex going forward. So it will be another way of getting some of the to monetize their stakes in these companies. But the question that you asked about the listing of Tata Sons, if you have to look at from a point of view of whether Tata Sons wants to list or not. Currently, the regulation says that they will have to by September 2025, but it seems that they are not inclined to do that, especially because they had struggled or fought very hard to take Tata Sons from public limited to private limited in 2017. And it seems that they are not looking at any way to do it. And this monetization of TCS, which happened in the last 2 weeks, is one indication that they are looking to pare down their debt to very significant low levels, so that they don't fall within the ambit. So there is still a debate. But when I asked this same question to one of the senior executives of the group, they said that it's the biggest gossip of the year. So that they left it at that.
Biggest gossip of the year. It's made it to all the tabloids and news agencies. Thank you, Sujit. You're always on top of what's happening at Tata Sons. This one's an interesting piece to that puzzle. Well, let's move on from the Tata Group to what we're expecting in the markets today. Remember, it's a holiday truncated week. Friday is again a holiday, and it's also the monthly F&O expiry. Agam is standing by with all the F&O action. Agam, I think it's testing the patience of most investors and traders on the street. That range-bound trade, one way or the other, we need a direction.
Yeah, mid-January was the first time we hit 22,000. Here we are, past mid-March, and we're still at 22,000. So consolidation is clearly the name of the game at the moment. And while we've had very, very sharp reactions in this period, well, there's not much to say for when it comes to, well, an addition in positions building as far as the index futures go. Coming down Friday, the picture wasn't any different. In fact, we saw unwinding of nearly 7% in the Nifty futures, even as the index once again moved back above the mark of 22,000. The Bank Nifty, it's trying to make its way up towards 47,000 now. The question really is, can it? A lot will depend on some of your big private sector banks, but we did see further unwinding as far as open interest is concerned there as well. Moving on, let's talk about the options market. Now, in terms of change, considering the Nifty moved higher, naturally we saw a lot more writing in the 22,000, 21,900 puts, as you can see on your screen there. Where does that bring when it comes to maximum open interest? At least as far as your overall distribution goes, the 22,000 put is the one with the maximum OI for this particular week. On the higher end, keeping an eye on 22,500, but not as much open interest build up as in calls, as much as we've seen in puts. Of course, this can change dramatically over the course of the next 2 sessions. And of course, come Thursday, we will have the expiry for the Nifty as well. But today is the Fin Nifty expiry. So where are we seeing a lot more traction? For now, you're expecting a lot more activity around the 20,900 to 21,000 on the Fin Nifty. Moving on, let's talk about stocks. What are we watching out for? We did see shorts in Gale, Dabur and Max Financial, and some longs building up in Shriram Finance along with Dr. Lal Pathlabs. In terms of unwinding, short covering for Tata Steel and SAIL, so 2 of those counters, in fact, which were giving the support to the benchmarks, at least as far as our trades concerned on Friday. Coal India looking at longs unwinding, even though the underlying was absolutely flat at the moment. L&T and Syngene International, among others, which also saw short covering. The question really is, what do you do with these stocks? And in fact, what do you do with the data that is being provided by the major indices? Let's get in an expert opinion. We have Chandan Taparia of Motilal Oswal, who's joining us on the show. Chandan, good morning. Thank you so much for joining in. Let's start with your views on the benchmarks. How are you trading the Nifty and the Bank Nifty this week?
Good morning, Agam. Thanks for having me. So we have truncated week and time for monthly expiry being last Thursday of the month. So if you look at the data setup, Nifty just up by few hundred points or few points from its previous month close. But the good part is trading slightly higher than volume weighted average. In the last month, we settled slightly below 22,000, and this time we are expecting slightly above 22,000, so a marginal gains. However, we have seen some shedding of OI, which indicates some sort of range-bound bias could be there. In the entire series, we traded in a range of around 800 points in between 21,700 to 22,526, and we believe it's likely to be in a range near 22,000. So we believe that buy on decline could continue with support of 21,880, and upside will be 22,2, 22, 22,350. So we have to play this range with buy on decline with support of 21,880 marks. Now talking about Bank Nifty, that is up by more than 1% in the series, trading slightly higher than previous close of 46,000 zone. So slightly higher, and 46,250 could act as a support. So buy on decline could continue with support of 46,250. It can witness an up move towards 47,250. So range bound bias, but slightly positive view, and buy on decline could continue in both the indices, given the market scenario setup and truncated week.
Okay, Chandan, so, recently we've seen Maruti Suzuki hit a new life high and also test 12,000. Where do we go from here? I believe you have a call here.
Yeah, we have a quite positive view on Maruti. In fact, Nifty Auto Index looks good. In auto basket, we like Maruti, Hero Moto, Tata Motors. In fact, Bajaj Auto looks good. So talking about Maruti, this is one of the strongest counter. Technically, it gave a pole and flag breakout on lower time frame. We have seen put writing built up a long position, and this time we are also expecting better rollover in the counter. So expecting rally to us 13,000. One can buy 12,500 call with a stop loss of 210, and it can head to us 400 levels.
All right, Chandan, the other stock on your radar, I believe, is Apollo Hospitals.
Yes, Agam, we are positive on the selective pharma name, including Sun Pharma, Apollo Hospital. And these stocks are comparatively doing well when index has been moving in a range. These stocks are getting to the recent highs and making higher base. So there is a reason that we are recommending to buy on Apollo Hospital, expecting the rally to 6,600 to 6,700. One can buy 6,500 call with support of 125. And here we have target to us 230, 250 zone.
All right. Of course, the advantage of buying a call is that theoretically you have an unlimited upside and a limited downside. And of course, the risk reward in this case does seem favorable for both the counters. And Chandan is playing positively both on Maruti Suzuki as well as Apollo Hospitals. Well, on that note, Chandan, taking a moment to thank you for joining us and taking us through your views on the markets, as well as giving us a handful of ideas on the very last minute too. And with that, well, it's back to you, Samina.
Thank you for that, Agam. That's the view coming in the markets and the F&O setup as we're gearing up for trade. Implied Nifty indicating to a slightly lower start in today's trade. Well, we also have with us Pankaj Pandey and Shrikant Chouhan will also join in shortly. Pankaj, what are you making of the fact that crude rate's much stronger now? The rupee is looking slightly weaker. Equity markets are somehow lacking direction. Do you feel like it is a tough market to make money? And if you are a tactical investor, would you still stay on cash or would you be buying at this stage?
Hi, good morning, Samina. Thanks for having me. I think overall our sense on the market is that we have seen Nifty sort of consolidating at higher levels, and our sense is that if 21,700 gets held, then we are about to sort of challenge new highs of 22,500. Now, while crude is definitely up largely because of the geopolitical issues, but a good part also is that the gas prices have softened. And I think overall, the kind of selling what you see in the month of March, especially in mid caps and small caps, I think that usually happens. So our sense is that even the mid caps and small caps are in a oversold territory. So going forward, our sense is that after 4 weeks of sort of decline, we should see some bit of a catch up even from the mid caps and small caps. And selectively, I think one should use this opportunity across large caps, mid caps, and small caps to sort of pick up stocks. We don't see much of a challenge from a macro perspective for India. And I think a good part also is that the domestic rates are sort of softening. Currency is not a big worry overall because I think RBI has been sort of managing currency quite well. Like last year, we had a very literally flat currency. So I think this year also we don't see currency sort of depreciating and impacting markets overall. given the fact that a lot of inflows are expected to be lined up in the second half. So we are quite constructive on the market, and our sense is that recent weakness should be used as an opportunity to buy.
Okay, Pankaj, good morning. Amongst the newsmakers today, there is this piece about how RBI might do a special audit for IIFL Finance, JM Financial. Now, these regulatory action seems to be the buzzword for the last 1 month. I wonder if the mention of these audits, etc., keeps a bit of an overhang on these stocks, or do you think the valuations are attractive now?
So, Niraj, RBI has been sort of quite proactive in a number of spaces, be it credit cards or be it even microfinance, and including some of the gold loan companies. So I think these are sort of good move in terms of preventing a bigger issues to be sort of created going forward. So while yes, it does create pressure on some of the names. Say, for example, IIFL Finance, if your 1/3 book is gold finance, and there, if you're not sort of growing, obviously it impacts the overall growth rate for FY25. But when you sort of look at it from an overall top-down perspective, I think our sense is that overall within the BFSI as a space, I think the bigger trigger would be the sort of decline in the interest rate. And somewhere I think our sense is that the RBI is looking to sort of make the liquidity a lot more easier. So while yes, you have stock-specific news impacting respective stocks, but we think that BFSI would be a good contributor to the Nifty sort of scaling up going forward, especially in the second half. And recent weakness should be used as an opportunity to buy. Take, for example, we've seen decline in some of the tier or good names like, say, Credit, Axis, Grameen in the microfinance side. Our sense is that with a company about to sort of gives about 4% kind of ROA, currently it is trading at 2.3 times. I think even if there is some bit of a softness in the overall growth rate, the overall risk reward is quite attractive.
We also have with us Shrikant Chouhan for a technical view on the markets. Shrikant, it's monthly expiry. What's the trade on the index today?
Yeah, good morning, everyone. I think, the markets are in the range. They are not breaking the level of 21,700, 800 decisively. But at the same time, at higher levels, 22,300, 350 is acting as major resistance for the market. As it's a monthly expiry, I think markets are going to remain in the range, and till the markets are not breaking the level of 21,700, which was the lowest of the previous week, I think the markets are going to display some pullback sort of activity in the market. We are of the view that today, in case if there is any lower opening, then close to 21,950, 22,000, we should look for adding some long positions. For the Bank Nifty, there also we are of the same view. There also the formation is indicating us that the Bank Nifty is heading higher. It is much better than the Nifty 50. And again, 46,500 should act as major support for it. But corresponding to 21,700, the level is 45,800. So till the Bank Nifty is not breaking 45,800 and Nifty is not breaking 21,700, we are going to see pullback in the market.
Okay, so if that is the overall stance, Shrikant, good morning. What are the stocks that one can play? I mean, are there recommendations that you're giving this morning?
Yeah, I think in that space, we need to focus on those companies which are parallel to the overall activity in the sectors. Like PSU banks did well in the first half of the previous month, I'm to say in the current month. And now again, after correcting to their important levels, they are rebounding back, like Bank of Baroda, Bank of India, State Bank of India, all are reversing after hitting their important support levels. And they were like rallying since last 3 months. So State Bank looks good at current levels, which is around some 745, 747. Here we can keep stop loss around 734 and we can again expect targets of 770, 765 on the higher side. So we are specifically bullish on PSU banks, but in that State Bank looks good because the stock has corrected to its important levels. The other stock which we like is ONGC. And there also we feel that it is heading higher. Also, if we go through with the Brent crude prices, then they are trading above the levels of 85, 86. So from here, the stock can move to the levels of 275. We can keep stop loss at 257 for creating any trading long positions on ONGC.
Right. Well, one stock that's also been on the radar for a lot of traders recently at least has been Interglobe Aviation. And this morning we're waking up to a whole bunch of brokerages that are pouring in on Interglobe. Mahima is standing by with more on that. Mahima, what are brokerages saying? Constructive calls?
Absolutely, Samina. So the brokerage stance on Interglobe Aviation is bullish. I'll start with Citi. Well, Citi has maintained buy with a target price of 3,700. They've said that the current supply and growth play will probably double the passenger traffic by FY30. They're saying that the addition of new A321 XLRs will expand and further grow, add to the passenger growth capacity. They are also expecting some kind of increase in the salary in the form of regulatory changes, and the incremental regulatory cost will be transferred to the passengers. The key risks include higher ATF prices because of crude prices and higher cost pressures from depreciating INR. We also had a Morgan Stanley note on Interglobe which maintains overweight with a target price of 4,145. They've said the company will add 1 new aircraft per week in 2024. The management aims for a double-digit capacity growth in FY25 versus their estimate of 6%. And Indigo will launch airline for new Jewar airport in Delhi. And lastly, MK also has a bullish stance. They've maintained ad with a target price of 3,500. Well, they're saying that the fleet addition continued with 8 planes in January to Feb 24, and the total the aircrafts that Indigo holds right now is around 366, and aircraft on ground will peak in the next 1 to 1.5 years. And the new airports Noida, Navi Mumbai will aid the passenger growth in current year 24 and 25. So these are the overall views of the brokerages on Interglobe Aviation.
Thanks for that, Mahima. So that's, well, a slew of brokerages, I think 4 or 5 which have come out. Morgan Stanley seems to be the most optimistic, but the others too not too far behind. Pankaj, do you guys cover Indigo? Were you part of this meet? And if not, do you have a view otherwise on Interglobe Aviation? Is it a good stock to add or have in your portfolio?
Niraj, overall, this stock we don't track, but I think we like the entire travel and tourism industry largely, even in the aviation space. If you look at, I think the Jewar airport could have a capacity of about 12 to 13 million odd, which is quite significant from the perspective that this is going to be double the size of the existing Delhi airport. On top of it, you will have another second airport coming in Delhi. Now, typically 40% of the volume happens between these two big cities. So I think the overall number of flyers have been about 14, 15 odd crores, and my sense is that this is one segment which is going to see a sort of a J-curve kind of a growth. I stand corrected. The capacity for Jewar airport could be in excess of 12 crores. So you're sort of creating massive capacities when you look at recent airfare. Those are sort of indicating quite bullish trends from an overall perspective. So I think we like this space, but sadly we don't have a coverage on this.
Shrikant, do you have a view on Interglobe Aviation? A very bullish analyst meet, but crude price is higher. So fundamentally, a couple of divergent forces at play. Technically, how does it look? Shrikant, sorry, you're on mute, I think.
Yeah, Niraj. Like after this particular analyst meet, we have upgraded the stock to 4,300 levels from the levels of 4,200. In fact, we were having buy on the stock, but again, after the meet, we have raised target to 4,300 levels. See, the important and the most bullish part of this particular company is that they are expecting to grow departures by 14%, where the industry is going to grow by 6%. So I think that is something which is adding some more firework in the stock. But technically also, if we see the market and if we see the overall specific performance of the stock, then it is forming higher top, higher bottom formation. Despite the promoters sold in the previous week, we saw upward activity in the stock, which clearly indicates that there is good amount of interest in the stock. And based on technical formations, I think the stock is heading for at least 3,500, 3,550 in the near term. So even at this level, it's a buy, but we have to keep a stop loss somewhere close to 3,000 levels because it's a positional buy. And with a medium term view, we should look for adding this stock to the portfolio.
Shrikant, quick word on OMCs, HPCL, BPCL, IOC, any trades here?
I think, all the stocks have corrected to their extreme levels. But because of the consistent weakness in the crude prices, we may see some sideways sort of activity at the bottom prices, I mean to say at the current levels. So I'm not expecting major bearishness in the stock based on technicals. But yes, we are also not expecting any firework in the near term. So there is possibility that stock like BPCL to trade between the range of 605, 610 on the high side and on the downside 560, 565. Ideal strategy should be to look for adding them if there is any correction in the market and in the stocks. Specifically, we like IOC based on its technical formation, and we can keep stop loss at 155 for the same.
Okay. Well, I think Citi today has upgraded IOC as well, or has said that it's a buy. And I take back my word about Morgan Stanley being the most optimistic on Indigo. It's actually Kotak with a price target revised from 4,200 to 4,300. But we're talking about oil marketing companies. I think hear out what Petroleum Minister Hardeep Singh Puri has to say about oil marketing companies and their performance.
Change is staring you in the face. Suddenly the public sector, I'm talking about perception now. I can come to individual companies. I'd be happy to share one or two examples. Public perception used to be that public sector companies are like the bureaucratic setup of the rest of the government. People come to office at 9 o'clock, run away at 5 o'clock, they are risk averse, they don't go out and grab the challenges which are available, and by and large, and there are some other allegations that the oil public sector companies or the OMCs are also excessively amenable to some of the big private sector giants, that they are able to control them. I think the good news is that public sector in general is doing very well. I also happen to be Minister for Housing and Urban Affairs. HUDCO has done very well. HUDCO has got what, a Maharatna status now. The OMCs, somebody said, but the market is rising. Yeah, market is rising, but the market rose 43% and the OMC valuations rose in multiples thereof, some 120%, 160%. Why? Because they've done a good job. And in a time of crisis, in a time where there was challenge, they proved their mettle, and the marketplace, I don't use words like the magic of the market, but the market has a lot of very intelligent people who can make assessments on what is happening, and that's how valuations go up.
Welcome back. You're watching India Market Open. We're gearing up for trade this morning. It's not going to be very exciting in terms of market opening. Implied Nifty indicating to a little bit of a gap down trade. Shrikant has 2 buy calls. You've got 2 calls coming from Shrikant as well, which we will take you through in a minute on the screen, and that should give you a sense of what his constructive calls are in early trade. So those will show up very shortly. There you go. He's got a buy call on ONGC with a target of 275. We will revisit this once the markets open up and update that for you as well. Well, 6 seconds to go as we gear up for pre-open trade. More than the equity markets, I think traders will be waiting to see what the currency markets open like in early trade. It should be a positive start on the dollar-rupee pair, keeping in line the yen and the yuan, which have actually recovered in a trade across Asian markets. That's clearly all over the place. So we will revisit this shortly. But for now, we've got a whole bunch of other spaces to be, watching out for. Pankaj and Niraj, tell us what you think about what's happening in the OMC pack. Is this looking like a good entry point to buy some of these oil and gas stocks?
Absolutely. I think one needs to look at, say, for example, what happened to sugar stock. Sugar stocks used to trade at 5-6 multiples because bulk of majority of the business was coming from sugar, and sugar, you could not build a case of good volume growth there. But when the sort of ethanol story started, and when you're sort of going up to 20% blending, I think the company started deriving 20-25% of their top line from this, and that looked sustainable. So multiples expanded for sugar companies from say 5-6 to 9-10 or some even more. I think something similar is also happening with OMCs. So I think if OMCs are venturing into renewable energy areas, then the business model looks a lot more sustainable. I think most of these companies used to trade at 5-6 multiples, but now the multiples are expanding, and our sense is that depending on what the kind of pace they adopt to change their business model. So for example, you have got about 80,000 petrol pumps. If these companies emerge as charging hubs, then I think the business model overall changes, and the kind of re-rating in multiples what you're seeing would look a lot more durable. So I think one should sort of look at these companies from the new realities or the possibility of new realities coming in. So we feel that a lot of these moves is quite durable in some of these firms.
Okay, so those are the views on the oil marketing companies. The other thing to monitor in the session today is Indus Towers. Fabulous move in Friday's trade. If you look at the last 5 days or 10 days, the stock had a stunning move. For now, it seems 3.5. Let's wait and watch what it settles at. But if indeed this the brokerage view that we have from Citi today says that this ATC decision, American Tower Company decision to convert debentures into equity would mean lower cash outflow for Vodafone Idea in FY25. That might mean that there could be some bit of cash or payment to vendors like Indus Tower, and any kind of recovery from Vodafone Idea would be construed as very positive for Indus Towers. I think that Citi view will come up on your screen in moments from now, but the larger point is their target is 320. They say the target could potentially rise to 380 or 400 as well. Now, Shrikant, very difficult to not like a chart like Indus Tower. Please tell us what are the risks here. I mean, I'm guessing that there are upsides here, but what are the levels you would watch out for?
See, based on technicals, Niraj, the stock is forming double bottom sort of formation on weekly, monthly basis. And the way there is run up, and whenever there is a correction in the stock, it recovers back and it crosses its previous high. So clearly indicates that it is heading for the levels of 330, 340, which was its major resistance. Because since if you see the stock on weekly basis, since 2019, whenever the stock reached to the levels of 330, 340, it witnessed great amount of selling pressure. This time also it is moving upward, and again the speed is equally faster than the overall expectations or the performance of the sector. So I think here the stock is heading for 340, 330. But yes, if there is any correction, then it should not break the level of 250. That's the risk. If it breaks 250, then it will break the entire formation. So 250 should be the final stop loss for holding and creating any long positions.
Right, that's Indus Towers expected to see a gap up in trade. Reliance, ICICI Bank are all looking really weak in pre-open trade. Of course, this is not conclusive by any ways, but there is some weakness that we are picking up on. ICICI Bank also down 2.5%. Pull up ICICI Securities, if we can see what that one is getting up to in early minutes of pre-open trade. 3% lower is what's expected. Remember that notice from the regulator on after a book inspection for its merchant banking unit in December is probably what's throwing the counter slightly off guard. But your insurance names will be in focus as well this morning. Shrikant, what is the take on ICICI Bank? It is rather one of the banks that most traders are constructive on in the private sector space. This morning expected to see a 2.5% gap down. If we do get it, do you think it could be a good trade for a pullback over the next few days?
Yeah, it looks like the reason is because we are specifically bullish on the bank Nifty. And in case if we see the move as per the expectations, then ICICI Bank should do well because it is forming higher top, higher bottom formation. One thing is very clear that the stock is not at all in hurry to move towards the fair value targets of 1,200 rupees. It is going up gradually, but eventually I think the stock is heading higher and the strategy should be to buy at current levels and more on dips. So for Axis Bank, for ICICI Bank, our view is that both are very strong, but we need to buy them with a view of at least next few weeks and not with a very short term view.
Okay, so that's the view on these stocks. But, you know, insurance is the other big thing today because of, again, regulatory clarity. I won't say regulatory action because IRDAI has notified the final regulation on insurance products, and it's a status quo on the surrender value of the non-linked, both par and non-par products. Now, lest this sound confusing, Mihika is here to simplify it for us from a perspective of what brokerages are saying after this clarification. Mihika, good morning.
Yes. So the final changes to what was proposed, they haven't made the changes. However, there have been some changes in the special surrender value computation. So this is basically the amount that insurance companies will pay you back when you terminate the policy before maturity. First, the surrender value is based on the computation of the assets. But now they need to take in consideration the expenses and they need to price the policy reasonably. And they should not, however, expenses should not exceed the limit set by the regulator, and the interest rate used for the calculation will not be lower than the pricing interest rate, which is the assumed rate of interest that insurance firm factors in while policy pricing. What this makes is, according to Morgan Stanley, it makes calculations more transparent. It also helps consistency across different companies and ensures the surrender value to reflect a reasonable share of the underlying firm cost. What Morgan Stanley is also saying that the final norms are largely unchanged versus the existing norms, and the regulations focuses on simplifying processes and ease of doing businesses. However, the proposed higher surrender value on the non-linked products does raise concern to the value for new business margins, and the new changes appear less onerous than proposed norms. They do expect HDFC Life to perform better in the near term, as the company has underperformed since the regulations were proposed back in December.
Okay, Mihika, thanks for that. So I'll just reiterate the brokerage view that Mihika was saying, that Morgan Stanley is constructive on this development as a result of the changes that have happened. We're not able to show you that, but effectively there is optimism around some of those stocks. There is a sales note from one of the leading brokerages which also speaks about this, that HDFC Life and Max Life will be the ones that will benefit the most. And they are structurally constructive on SBI Life, but today SBI Life is not moving. Now, Pankaj Pandey, do you track insurance, life insurance?
So, Niraj, I think if you look at FY23, the premium growth for these insurance companies was about 18%, and subsequent to that, you had taxation being introduced for high value policies. So this year, YTD till Feb, the growth rate is absolutely flat. And I think if you are getting a relief in terms of surrender values not being sort of changed much, I think this is a sort of a positive relief for most of the players. Structurally, we like SBI Life largely because they've got a sort of a balanced product portfolio. They have been doing a lot more better in terms of premium growth. So I think this overall development is definitely a positive for the entire LI as a space.
Quick word from you on Uno Minda. The stock has a little bit of a positive news flow, and in pre-open it's indicating to a pretty big gap up. How would you play Uno Minda?
Me for quite some time, largely because it's already a play on automotive switches plus alloy wheels. Now, if you're sort of venturing into say charging as a space, I think this is one company which is a good proxy on the overall EV transition, which is sort of panning out, or the premiumization of the entire auto industry, what we are looking at, because this is one of the largest auto ancillary companies. So I think this stock looks good to us from a portfolio perspective.
Shrikant, you track Uno Minda on the charts. How does this look if you do get a gap up of 4%?
Yeah, I think this stock is showing some specific strength in terms of its daily charts as well as weekly charts, because it is also forming some reversal sort of activity on weekly and monthly basis. But most of the time, whenever the stock moves to the levels of 700, it finds some selling pressure. So I think at this level, the stock is at the middle, and from here, the stock can move to the levels of 700, but also there is risk that in case if there is any weakness in the market, then the stock can come back to the levels of 605 or 20. So the strategy should be to buy on dips instead of waiting at current levels. Let the stock correct back to the levels of 620.25. On the higher side, yes, there is a possibility that the stock can eventually reach the levels of 700.
Shrikant, I want to get the conversation back to life insurance to just round off the loop. Max Life and HDFC Life have started off positively, Max in particular. Do you see upsides here? Shrikant,
yeah,
Chouhan?
Yes, in that space, HDFC Life is certainly indicating us or suggesting us that it is heading higher. The reason is because the stock was falling vertically after hitting the levels of 700 and after the specific proposal from the regulators. But now, after this clarity and transparency, I think the stock is again going to pull its previous highs, which are somewhere close to 680-700. I think at these levels, the risk-reward ratio is quite favorable for those who likes all these stocks to buy and hold with a medium-term view. I think at these levels, it's a buy. With a stop loss at 610, we are expecting stock to move towards 700 very soon.
Some stocks which are carrying on from Friday's move. One of them is Symphony. I wonder if it's the promise of a hot summer, which is leading to cooling solution companies do well. 884, the last, just 0.5% actually. On the BSE, it shows about 2%, maybe I'm mistaken, but there is some uptick out there. Network 18, TV 18 are also doing okay for themselves. And as Samina highlighted, Uno Minda is doing well. So clutch of stocks which have had a half-decent start in the session today. Pankaj Pandey, we have about a minute and a half left. A small cap idea from your house, recent coverage. One minute answer, please.
So, Niraj, recently we have initiated coverage on HEG with a target price 2,240. I think the reason for liking this stock is that structurally we will see more of EF capacity coming in, which would mean that you would need about 2 lakh ton kind of a capacity of graphite electrodes. I think the industry itself is 8 lakh in size, with HEG about 1 lakh. So our sense is that the demand supply situation is going to turn more favorable for a lot of these players, and HEG would be the biggest beneficiary with a capacity of 1 lakh.
Right. Shrikant, Amber Enterprise, have you seen the kind of move the stock has made last week? I mean, it's had a pretty solid run in the last few days. And of course, there's news that they've about 50% stake in Resojet. Do you track Amber Enterprise?
Yeah, we track and we like this particular company. The reason is because it is into long-term uptrend. And after connecting to the levels of 2,900 or 3,000 levels, it rebounded very quickly and very sharply. So based on its price pattern, based on its volume pattern, I think again, the stock is heading for the levels of 4,400 or 4,500. At these levels, it's a buy, but with a view of investment and not with a very short-term view, because the stock can again correct back to the levels of at least 3,200, which is deep down levels from current levels. So it's a better to buy at current levels, more on dips, and hold for the major targets or longer targets of 4,500.
Well, a couple of positional calls from Shrikant today. One of them is Amber that he just spoke about. The other one is Interglobe Aviation, wherein he's saying no immediate buy calls, but watch out for some positivity during the course of the next few weeks or months, if you will. 6 seconds left for the markets to kickstart trade. We'll have a start which is maybe a bit subdued. The question only is, can some of the insurance, can some of the auto names surprise on the upside? But here's the first trades. Slightly worse off than what the implied open, actually pretty much in line out there, about 0.33% for the Nifty 50. Banks, about 0.25%. I wonder if IT is sulking a bit more. Mid caps, flattish. Okay, let's round off the loop with small caps and IT. IT, flattish. And the small cap index should come up on your screen. Again, flattish. No big moves there. Samina might have much better stocks to talk about, but let's bring up the index stocks nevertheless and try and see what is moving and what's not. So life insurance right up there. HDFC Life up about a couple of percentage points, clearly moving higher. Adani Ports, they've entered into an agreement to acquire a port from the SP Group for 1,300 crores, enterprise value higher, but they'll pay 1,300 crores. Maybe that is what is helping the stock today. Tata Motors, analysts meet tomorrow. Watch out for Tata Motors in the next 2 or 3 days. But auto is clearly right up there, right? M&M and Tata Motors are doing well, but more red than green. What is sulking? Britannia, couple of percentage points lower. I think it might be due to the fact that wheat, cocoa, etc., all prices are moving up, and as a result of which there is some bit of problem there for Britannia. ONGC is actually down about 1% despite the fact that crude prices are higher. We'll ask Shrikant whether he'll use this dip to buy into ONGC because that was one of his calls. Reliance is down as well, so there is some heavyweights putting pressure. But I must say the quantum of green is starting to inch up a little bit. So on that positive note, I'll hand it over to Samina. Samina, autos, insurance seems to be the buzzword this morning.
There are a couple of movers. So the likes of an Indus Tower are actually catching all our attention. On the sell side, you've got stocks like Pfizer that are doing quite badly. We'll understand more in a few minutes, but a quick take on a couple of movers and shakers from the broader markets this morning. Niraj has already highlighted HDFC Life. So we'll build on to that theme where life insurance players are having a pretty solid day. IRIDA has got some clarification that's come out in terms of surrender value. So some clarity on that front has led to two of the top insurance players in the private sector space, like HDFC Life and Max Life, do really well. Max Life, of course, up about 5.5% as we see it right now. HDFC Life up 3% odd. ICICI Securities, remember they've been pulled up by the regulator. No material impact, but post their books were checked on. There was some indication of concerns regarding merchant banking. But the stock, which was weak in pre-open trade, has actually seen a flat start. Interglobe Aviation is doing well on a bunch of brokerage upgrades and increase in target price. Really means that Interglobe Aviation is having a pretty solid morning on a day when the markets are actually looking quite down, 1.5% higher on Interglobe Aviation is what we have. Uno Minda, this one may be the stock of the day. They've talked about how they've signed a deal to supply EV supply chargers and manufacture and supply in India. The stock, which was up 5% only a few minutes ago, is off the day's high point, but still looking good. And there are also brokerages that are maintained. So Jefferies has maintained an 820 rupee target price on Uno Minda. Well, apart from that, you've also got Indus Towers. If I can pull that one up, that's up 2%. So a lot of these counters, which were rearing in the first few minutes of trade, are off the day's high point, but still looking good in Indus. A couple of factors there that are driving the counter. And of course, you've also got Rail Vikas Nigam. But with regard to Indus Tower, the target price has been raised to 380 to 400. ATC debenture conversion to equity will be a positive and lead to lesser cash outgo for Vodafone India. They expect Indus to generate $40 billion of free cash flow in FY25. So that's why you're seeing a big decent move on Indus Towers this morning. This comes in after an 8.5% up move. The stocks on Friday. There's also reports that Vodafone may be looking to offload some amount of stake in Indus. Well, Rail Vikas Nigam, if I can pull that one up, they've signed a deal with the airport authorities of Calcutta. The stock is up 2%. So Niraj, You know what's interesting is a whole bunch of these counters open with a bigger gap up, but a lot of that has already gotten sold into in the last 2-3 minutes, so it's moving really swiftly.
Yes, it is, Samina, and that's the interesting piece. The one stock that we had spoken about in the trade setup, I need to highlight, is JSPL. Jindal Steel is up about 3%. I'm guessing it's because of Naveen Jindal joining BJP and moving out of Congress. I can see no other reason why that could happen, because it's not that all the other metal stocks are up and about in the session today. So bear that in mind. Well, lots of moving parts. Max Financial is the top gainer, up about 6%. Shrikant, quick view on MFSL. And of course, whether you'll use this slight weakness in ONGC to buy, because you had a buy call earlier on ONGC, if I'm not wrong.
So very first for ONGC, yes, it's a buy. Yes, it is correcting from the previous close, but it is very close to its multiple support levels of 259 to 60. So it's a buy at current levels and with the same stop loss of 257. For MFSL, I think the stock is in the range. It is not crossing the level of 1010 so easily. Since last 3 times, whenever the stock moved to the levels of 1010, it came back. But this time there is like some performance and volumes are also like increasing whenever the stock is very close to its breakout level. So about 1010, we are expecting stock to move towards 1060 or 1080. And broadly, the broader pattern of the stock is bullish. So I think at this level, it's a buy.
Okay. So buy on both ONGC, which is down today, and Max, which is up 6%. Shrikant still finds comfort in that one. By the way, Tata Investments, Samina, is down 5% yet again.
I like how you're telling me this. It's another day, it's another 5%.
It's another day, another 5%. That's true.
But you know, your ICICI Pru is also doing a pretty solid catch-up now, turning out to do better than HDFC. It's up 4.5% on ICICI Pru. Yeah, 4% on that counter.
So life insurance right out there.
That is the story of the morning. Also, another quick one, you mentioned this in the morning on your straight setup, was that special audit on GM and IFL. And GM is not taking that well. The stock is down and out again with a 3% cut. This could be, and this should be, on back of those reports that we heard of.
So, because IFL too is down about 2.5%.
Yeah, so IFL and JM both seeing some weakness on fears of a special audit on the 11th, which will kickstart on the 11th of April.
Yeah, okay. So
Tech is looking good.
Sorry, yeah,
Tech is, HCL Tech is up to 2.5%. Some of those tech names aren't having too bad a morning.
Yeah, the other big mover today, by the way, is EIH Hotel. That stock is up 5% at 443. So really strong show. And Reddington, for some reason, is up about 5% as well. So these are a couple of high-flying movers in the session today. DMart up 3%. Pankaj Pandey, I believe ICICI Securities has upgraded DMart, Avenue Supermarts, 4427. Why do you like it?
So Niraj, that upgrade is from the institutional side. We haven't, I think one small correction from my side, the HEG target price is 2,420. Now, Avenue Supermart, unless and until our sense is that the apparel business does not sort of start growing, which is what has been the laggard for most of the companies on the apparel side. I think probably 1 or 2 quarters down the line, that is when the improvement could start or is expected. So till that time, the apparel business does not start contributing. Our sense is that DMart may not do meaningful outperformance going forward.
Okay, that's that's the view on Avenue Supermarts. I stand corrected. It's the ICICI Insti team which has upgraded Avenue Supermarts. Pankaj, of course, doesn't believe that as of now there might be value there, but the stock is up 3%. So keep that in mind. For the longest time, Avenue Supermarts has not made a move, Shrikant Chouhan. It's finally making a move for the last 3 or 4 sessions, or maybe the last 10 sessions. Do you think it's making a convincing argument to move higher on the charts?
Yeah, I think there are a number of what I can say is that parameters which are indicating us that the stock is heading higher. Fundamentally, yes, the stock is expensive, but technically, if you see the pattern, then since May 2022, the stock was holding below the levels of 4,000. But on the dismissal of 4,000, we are seeing good amount of volume attraction, and all the important averages, they are converging positively. I'm to say the price is much, much higher or above the all important long-term averages. So it means that there is like specific buying interest in the stock. And again, the stock can pull to the recent, I'm to say the overall sell-off that we saw in the stock. So we can see the levels of at least 5,200 or 5,500 based on its technical formation. I think even at current levels, it's a buy, more on dips, but it is purely based on technicals because fundamentally it is expensive and we have sell rating on the stock. But technically, the stock is crossing all its important levels, so it's a buy. Keep a stop loss at 4,000 and on the high side, the stock can move to the levels of 5,400 or 5,500. So there is like good risk-reward ratio for creating any long position.
HAL on back of the order win is also looking good. 190 odd crores was the order win. The stock is up 2%. Shrikant, some of those Adani Group names are also having a pretty solid day. Adani Energy is up 3.5%. Adani Green is looking good. Adani Port is also trading with a gain of 2%. On the Adani pack, any trading opportunities on the long side?
Yeah, in that space, we like Adani Ports, which is around 1,300 levels. The stock is forming consistent series of higher top, higher bottom. And this time also, after hitting the levels of 1180, it quickly came back to the levels of 1,300. So based on its overall formation, whenever there is a fall in the stock, we see hardly any volume. But after hitting the important supports, it starts generating some specific buying interest in the stocks, or we see some volume-based buying, delivery-based buying in the stock. I think the stock is heading for eventually 1,500, but in the near term, based on its technical formation, we can see the levels of 1,400. So even at these levels, it's a buy with a stop loss close to 1,260.
Right, it's a buy on Adani Ports, the stop with a very tight stop loss. In the meantime, the markets are looking okay. The Nifty 500 trades flat, while the Nifty 50 itself is also seeing a cut of only about 30 odd points. So you can't rule out the fact that we may turn positive as we go along through the day. The breadth of the market's not too bad. The smaller sectors that are picking up focus today are sectors such as insurance. So your top gainers of the Nifty 500 are coming in from the insurance pack. Your Max Financial, your HDFC Life, ICICI Life are all actually trading with gains of 3 to 4%. Along with that, Indus Towers is up 4%. Adani Group stocks are doing well. Torrent Power, BSC, Rail Vikas, HAL on back of order wins are trading with gains of 2 to 3%. On the sell side, it is JM and IFL that are seeing some weakness, 3 to 4% cut there. Delivery is down 4%. You've got Hitachi, JBM Auto, Macrotech, Amber. These are stocks that did really well last week that are taking a bit of a breather in today's day of trade. But before we slip into a quick break, here is Zomato's Dipinder Goyal talking about the impact of Flipkart's entry in the quick commerce space and more. Listen in.
Flipkart is a huge company, and it's the pioneers in e-commerce. So I think it's a huge validation for us that Flipkart is entering the space, and it will, I think, obviously expand the market for us. So we are super duper excited to have them in the space.
Super interesting. You also spoke very recently about how Blinkit is shaping up, and in terms of GMV, it might overtake Zomato very, very soon. Firstly, how soon do you see that happening? And what are the macro underlying trends that are sort of playing out with this trend that you're capturing?
It's actually very easy. Blinkit is almost half the size of Zomato right now, and growing much, much faster. So how soon could be anywhere between 1, 2, 3 years? I don't know. It depends on how growth rate pans out over the next few months. So I think quick commerce is going to be bigger than Zomato at some point in time, but I hope that we don't get there, because my goal is to make sure Zomato grows faster than quick commerce.
Nice. Yeah, that's Albi's role to do that. Yeah. The next question I'd like to ask is, you started a new segment, a new reporting business segment called Dining Out. How is that shaping up? You're bringing new artists, be it music, comedy. Do you see it becoming a very meaningful part of Zomato's revenue going ahead?
So we have two once-in-a-lifetime businesses in Zomato and Blinkit. So anything that we pick and touch, we actually think of it from a lens of whether this can become very, very large. And we think dining out and live events can actually become very, very large. So let's see.
Welcome back. You're watching India Market Open. There's so much more happening with coffee producers this morning. In fact, we have the Cafe Coffee Day, CCL, joining us on the show to talk to us about a couple of updates from the company. And also, this is in backdrop of the fact that Robusta prices are actually trading at a 30-year high. Hi, Praveen. Good morning. Thank you very much for joining us. Praveen, it was last quarter you indicated that your local capacity, and this is of course not Vietnam, but India capacity was at peak. I believe there was a new capacity that was expected to hit the grounds as we speak in the month of March. And we believe that you've reported to the exchanges that capacity is come on stream. You want to update us on what this means?
Yeah, hi, good morning. Thank you for having me here. Yes, you're right. The capacity is now up and running at our India facility, which is under the subsidiary Food and Beverages Park. So that is up and running, and this was primarily put for the demand that we had been observing for last couple of years. So yeah, that's up and running now. So that's the update on that.
So how is Praveen? What is the capacity of this plant? And also with 100% at your existing capacity, how much more can we expect this plant to contribute to top line now in terms of volumes?
So, in terms of volumes, we had indicated that we are kind of, we are aggressively planning to grow at around 18 to 20% volume. And because of that, we felt that we need to, up our ante in terms of putting up more capacities. And this is in line with our, growth projections. And therefore, we put up this capacity, which is a spray dried capacity of 16,000 metric tons. So as we speak today, we are now almost at a combined level, at a group level, we are at 70,000 metric tons capacity. And in another 6 months or so, we will add another 6,000 metric tons of freeze-dried at Vietnam plant, which will make the total capacity at around 77,000 metric tons. And this is in line with our, growth projections, because a couple of years ago, we were at 38,000 metric tons. And we had indicated that with an 18% or 20% volume growth, we probably are looking to double our, turnover, volume turnover in the next 4 years. So that is why we ended up, putting these capacities.
Now, let's just take a step back, and I want to understand what this plant is going to produce, right? You do have, and some of your growth vectors, high growth vectors, were your premium product offerings, so cold brew, for example. Is this going to be coming out of this new plant? And also, I believe you ventured into B2C now. So there has been an expansion in terms of your offerings as well. Is the new plant going to be supporting these expansion plans?
So I think, the answer lies in your question. Actually, the more premium product, like let's say the cold brew and all that, will keep happening from our old plant, because that's where our equipments are, like IES and aroma and recovery and things like that. This new plant is largely, as you rightly put it, to cater for our, B2C demand, which is now grown up substantially. So in fact, the whole domestic market, which we began our journey around 5-6 years ago, requires now around 5,000, 6,000 metric tons of the product. So therefore, what we see is that this plant probably will be able to single-mindedly focus on the domestic demand. And then we, with the rest of the capacity, we'll try and, fill up the exports demand as well. So yeah, that's the plan from our side.
Praveen, good morning. Niraj here.
Yeah.
So you guys have always maintained this 20-25% CAGR or whatever it is, right? Doubling in 4 years. So is this that what does this whole B2C arrangement bring to the table? Is it bringing the turnover in order to maintain that growth rate, or does it change the vectors around margins, around return ratios, and maybe around valuations as well?
So yeah, I think it's kind of both. So fundamentally, we wanted to get into. We have been supplying to almost all the brand owners across the globe, and we understand the kind of value that brand brings onto the table. It's not just one thing, but multiple things that comes to the table because of better margins, better value that the brand gets into your table, better goodwill, better valuations. All of that comes into picture. And as a matter of fact, we have been supporting so many brands across the globe, and we thought that it's high time that we also get into B2C space, considering the kind of knowledge base that we have in terms of our understanding of instant coffee market. And that's how we got into this space. And thankfully, things have worked well for us. In good 5 years time, we were able to create a brand portfolio of approximately 200 crores, which is quite a good number. And buoyed by this, we have been now aggressively focusing on building the brands, not only now in India, but also in some of the offshore markets. So we recently acquired a brand in UK, Percol and Rocket Fuel, from the Lofbergs Group. And we are very confident to build that brand in UK, because we also realize that some of the international markets are quite big when it comes to coffee. And therefore, we wanted to end up having some sort of a brand play there as well.
So, Mr. Jaipuriar, the other question would be, how is this B2C foray started off? Because, I mean, of course, you've done the promotional activities. So a few people have spoken to us about the coffee as well. But what has the response been? And is this too initial a period to gauge, or are you Are the numbers looking good?
So now it's been 5 years, so I can't say now it is initial.
I thought the Bombay foray was recent, if I'm not wrong, or was it not?
Yeah. No, so we really started with South because that's where the coffee market in India kind of is concentrated towards, and we didn't want to kind of waste our resources in terms of spreading us too thin. So that's the reason we started in South, and it's been 5 years. The response has been really, really good. In very quick time, we have been able to build this portfolio, which was very difficult. It was actually a very, very two-player market, and to have a third player, we are now the number 3 player in India as far as branded instant coffee is concerned. So that's been a very, very good journey, and I think we have now passed the stage where we would be in that still gauging kind of a mode. We can now firmly say that the brand is here to stay. It has got established. And in fact, buoyed by that success, we are now very, very confident to build it up not only in India, but probably take it to some of the other markets across the globe as well.
Praveen, a couple of pieces to your global business. I do understand that you all had compromised on margins to pick up capacity or to utilize capacity in Vietnam. Now with Vietnam also operating at almost 100% capacity, can we expect blended margins to return back to levels of 20 plus? Because I know you enjoyed those sort of margins at the start of this financial year. So talk to me about that, what we can expect on blended margins. And secondly, how are you navigating the Red Sea impact? Is that now behind us? Have you managed a way to deal with those delays in shipments?
First thing about the margin and let's see. Yes, you're right. There are phases in our growth trajectory when you'll see that whenever the capacities get augmented and we really want to kind of, fill the capacity fast so that we get to those economies of scale. So we do end up, getting, or let's say, acquiring some low margins business as well. But I have always maintained that there are certain factors which will, pull up the margin. There are certain factors which will pull down the margin. So while the margins got a little pulled down because of the fact that we initially wanted to kind of fill the capacity, but at the same time, we were also concentrating on things like smaller packs, specialty coffee, the more upgraded coffee like cold brew and all that, which also pulls up the margin. So therefore, there has been a little pull down and a pull up, and that's the reason, at a per kg EBITDA levels, we have been able to maintain the margin. Optically, because the coffee prices have gone up, you probably see as a percentage of top line, the margins probably would have reduced. But, at a per kg, at an overall company level, we maintain very, very similar margins. So that's not a cause of concern at all for us. Coming to your second question about Red Sea, the problem still exists. What has happened is that, yes, there has been a rerouting. So instead of Red Sea, a lot of liners are now taking the stock through Cape of Good Hope, which means that there'll be a little increase in the freight cost and a little 5-6 days of more travel time. So I think
quantify the impact of that 5-6 day delay on your margins, if there is any on financials.
So not really, because most of our contracts are FOB contracts.
Okay.
So that's the reason we don't see much of an impact. We have had worse impact during COVID times when the prices were even more higher than what it is today. So I think we that time also, as we had maintained that because our contracts are largely FOBs, we don't kind of get impacted a lot on the margins. Yes, for the little contracts which are CIF, we probably will get a little impact, but that's manageable and that we can absorb easily.
One last question. What's your view on coffee prices? They've gone through the roof. Do you think more will happen? And I know usually you are a converter or a B2B business doesn't get impacted, but now you're B2C as well. So could there be an issue there?
Yeah, the coffee prices have been on the boil. So that's been a cause of worry across the market. But there are two things which I want to tell. One is the fact that, thankfully, we haven't seen any impact on the demand, and largely the in-home demand that has been intact, which means that, instant coffee, the demand side is not much of a problem as of now. So we don't see much of an impact on our order. Yes, what happens in such scenarios is that the client also gets into a little wait and watch. So therefore, they are also not committed towards long-term contracts. So the contracts get a little shorter. And as you rightly put, we are a cost plus model, so our margins don't get affected. So our per kilo EBITDA margins remain intact. As far as the B2C is concerned, yes, there is impact, but if you would have seen the category, most of the category players have been kind of absorbing this through price increases and things like that, and other cost efficiency measures. So we are also taking a lot of that. Thankfully, a lot of our B2C sales are large packs, so there our ability to increase prices are much better than the smaller packs. So we have been able to kind of pass a lot of these price increases to the end consumer.
Right. Thank you, Praveen, and good luck with business. It's looking up for Cafe Coffee Day. So thank you very much for joining us. We'll take a break. We'll come back. We'll talk to Anindya Banerjee of Kotak Securities to understand the pulls and pressures in the currency markets. Welcome back. While the equity markets have been keeping us busy, it's currency markets that we can't get our eyes off after what we've seen over the last few days. Anindya Banerjee, Head of Research, Currency and Commodity Derivatives of Kotak Securities, now joins in. Anindya, thank you. Morning. Thanks a ton for joining us. Anindya, what we saw on Friday was dollar strength, year-end demand by oil importers, higher crude prices, some outflow from the equity markets, and surprisingly, no intervention from the RBI. So most of this was business as usual. Was there anything peculiar about what we saw in terms of trade on Friday and what we're currently seeing in the dollar-rupee pair, or this doesn't seem too concerning at this stage?
Yes, actually, it is the final 2 weeks. If we start looking at the market from last Friday, the final 2 weeks of the financial year, there are some weird moves because we tend to see a lot of sudden demand or sudden supply. And that tends to create a lot of fluctuation in the market, like we saw. Yes, along with that, what happened was the market was extremely short because for 18 months, if you look at the volatility of USD-INR, it has plunged to the levels we had seen in 2002. So you can imagine 2-decade low in volatility. So it had created a significant amount of complacency and shorts in the market. And so on Friday, when USD INR started to move higher due to the global cues and RBI did not come in to intervene, we saw that kind of a short covering, which especially started around 3 o'clock and continued till 5. And today, once the short covering is done, you have seen a gap down open. But we will see the volatility continue over the next 3 trading sessions, including today, because today is the last spot date of the financial year. And we could see some kind of exporter selling coming into the market. So this is more of a year-end phenomenon.
Okay, let's talk about going ahead and what this really means in terms of what has the demand for hedging really been? Forward premiums have also gone up from what I understand. Where is the demand coming in from, importers or exporters? What I want to gauge from you is, in the medium term, do you see strength returning back to the currency? And hence, in that case, are importers going naked, exporters hedging? Give me a picture of what's happening.
Sure. See, the hedging activity, what we have seen over a long time is a function of uncertainty. The higher the uncertainty, higher the volatility, higher is your demand for hedging. Both from the importers and the exporters. The importers will always talk about the high forward premium, why they should come and hedge by paying the forward premium. And for the exporters, it makes sense to hedge if they see the rupee appreciating. So what has happened over the past 15 months is that the compressed volatility has kept the hedging away. So basically we are seeing hedging, but it is always lower than usual, because people are more comfortable selling on the spot than trying to use forwards to hedge. Some bit of long-term FX hedging has happened because of a decently high forward premium. But if you talk about the hedging in the near months, that has been low, and that's not going to increase until and unless the volatility comes back. Now, going forward, especially looking at the next 3 months in the first quarter of the next financial year, there are factors like the increase in the flows in the debt market that's going to happen because of the inclusion process starting in the JP Morgan bond index. So we'll see increased flows of FPIs in the debt market. The equity flows are choppy, but at the same time, we could see the dollar strengthen internationally, especially if the April inflation data that comes out higher than expected. If that happens, we could see the US bond yields rise, and that could push the dollar higher. So on one hand, we have the debt flows, which is going to be positive for the Indian rupee, but on the other hand, the global cues is going to be negative for the Indian rupee. So we could see a more of a
They usually and historically, and for whatever it's worth, the RBI usually takes a cue from the Fed and moves on rates. This time, there might be a little bit of an anomaly, because we've already seen some of those. I mean, Switzerland has gone out and cut rates. There was expectation some other countries may follow suit. Despite the rate differential impact, what is the currency market currently anticipating? Are they working with a rate cut irrespective of what the Fed does?
No, the first move is expected from the Fed, because the Fed is expected to cut from June, and the market is not anticipating any move from RBI from now till June at least. So RBI will be following the Fed. Yes, the expectation is that the inflation is going to come down over the second half, and that may push the RBI to cut more, but it's going to basically follow the Fed.
Okay, Anindya, we'll leave it at that. Thanks for this very quick perspective. Really, really appreciate your time. And at the last moment as well, because you kind of, we approached you late, but thank you so much for agreeing to do this.
Thanks so much.
So that's the view on the currency, a quick one at that. Must say, the equity markets currently, with the way they are poised, are about or in or around the low point of the day, but in a very tight band, really, nothing too dramatic. So that's to be kept in mind. The stock that is really buzzing, aside of Avenue Supermarts, is Indus Tower. So watch out for these two names. Indus Tower up 4% and Avenue Supermarts up 4%. So very strong show by these, aside of course, the insurance names which have done well. But there's some more news. State government bond issuances have exceeded targets for 3 consecutive weeks. But what's causing this sudden spike in state borrowings this March? Vishy Johnson with the details. Vishy, good morning.
Good morning, Niraj. So as you pointed out, there is a sudden spike that has been noticed with regard to state government bond borrowings over the last 2 weeks, and then now this week as well. So, for example, last week, which was the week starting March 19th, the total borrowings listed were about 50,000 odd crore, which was significantly higher than the 27,000, 28,000 crore that was targeted for that week. Similarly, in the current week, the exceeding portion is about 51%. So total cumulative borrowings listed are 60,000 crore, while the target was close to about 30,000 crore. So there has been this spike, and this is largely being driven from what market sources are telling us, is that it's largely being driven by lower grants that are coming in from the central government, as well as some issues with state governments managing their fiscal deficit. If you know that the 15th Financial Commission, of course, states exactly how much money will go from the center to the states, and this is expected to taper down as time goes. So between FY22 and FY26, it's supposed to consecutively come down. So now that the states have a high requirement because of more infrastructure projects coming up right before the election, and some of the necessary spending, like, for example, in the National Pension Scheme. These spendings together have bundled up, and that's why state governments are going out and borrowing much beyond what they were targeted to borrow during these weeks. Remember that even though these weekly auctions have exceeded the target, the overall for the quarter, the numbers remain still within that range of about 4.2 lakh crore for the Jan-March quarter, and similarly for the whole financial year as well. It's still within the target. But these weekly exceedings did catch the market by surprise.
Right. Thanks, Vishy, for that. So there is that bond markets, as a currency markets, all being caught off guard on back of global and local factors. With that, the markets are holding flat. But with that, we're completely out of time. So thanks for watching. This is a wrap on India Market Open. There is a lot more programming on the other side, and this Talking Point with Niraj. So stay tuned.
Thanks for tuning in back to NDTV Profit. The markets are about 1/3% lower. So it's kind of been this very steady state performance for the markets since the start of the trading day today. No dramatics, which is an interesting thing. I was trying to look at the A group stocks which have done well. APAR Industries fits that bill very well, 6719. So we've spoken about insurance, that's had a great run. We've spoken about some of the IT companies just fluttering around, but look at APAR, 6% higher, very strong show for that one. So keep an eye out for that. Keep an eye out for PNC Infra with a 4.5% uptick. I think that's done well for itself. And there is strength in Torrent Power yet again with 3.5% gains. That's at 1330. So again, gaining very well for itself. Today though, VMart, DMart, maybe some of the other, I wonder if Trent is up, but some of these retail plays have done very well for themselves. So that's the other aspect to keep in mind. Slow and steady, Bajaj Finance is now knocking on the doors of 7,000, 6,924. A month ago, Bajaj Finance was at 6,200 or 6,300. Just goes to show that quality gets bought into. And today, the other set of stocks which have done very well are the diagnostic companies. So Dr. Lal Path Labs, Metropolis, maybe some of the others too, but I think they are certainly perking up in trade. Look at Dr. Lal, up 4.5%. Look at Metropolis, up about 3% as well. So individually, some of the companies in the, not Thyrocare, but the companies in the diagnostic space have done well for themselves. So that's to be kept in mind as well. Okay, thanks for tuning into Talking Point. I'm your host, Niraj Shah. Now, before we get to the case for a chat with our guest, I think insurance deserves a mention today because clearly insurance is the big talking point. And my colleague Mihika joins in to talk about what is it that some of the brokerages have said when it comes to the insurance stocks on the back of clarifications that seem to have come in from the insurance regulator. Mihika, good morning.
Good morning. So yes, with the Insurance Regulatory and Development Authority of India's final norms largely unchanged to the existing norm, Morgan Stanley has stated that their initial discussions with insurance companies suggest low risk, if any, to the value for new business margins. The regulator has retained the existing surrender value guidelines, easing the December overhang on the insurance companies. However, there are some changes to the special surrender value computations. Morgan Stanley has stated that the final regulations are largely focused on simplifying the process and the ease of doing business, whereas also providing fairer and more equitable treatment for the policyholders. The brokerage expects HDFC Life Insurance to perform better in the near term because of its underperformance in the last 3 months, as the stock was the one that was mainly impacted since the changes with the regulations were announced back in December 2023.
Okay, Mihika, thanks for putting that into perspective. So clearly, some of these insurance firms firmly in focus, and we'll talk about that with our guest today. But let me establish the case for a chat for getting in. Our today's guest on Talking Point. He's, of course, Tahir Badshah, President and CEO of Invesco. The question remains whether macro triggers are already priced in or no. So we start off with the last point first. We ask Tahir Badshah whether it's wiser to wait for valuations to moderate and whether private banks, which is the unanimous focal point for most investors, will that drive the BFSI pickup or will it be something else? He's the President and CEO of Invesco Mutual Fund. Tahir Badshah joins me right now on Talking Point. Tahir, great having you. Thanks for taking the time out. I hope all is well.
Morning. Yeah, everything okay. Hi, Niraj.
Tahir, great having you once again. And I want to start off with that argument, Tahir. A clutch of your colleagues, maybe your fund as well, has taken this step that let's be a bit